Hello, traders out there in Traderland, and welcome to the weekend edition. This video is good through Sunday, March 20th, 2011, and the markets have been nothing short of interesting. Big drop here this past week with a little bit of a rally on Thursday and Friday. Fridays we ended up in positive territory, banks doing quite well, VIX dropping, gold going up, the US dollar going down, crude oil continuing to rise. And on Friday we did have gold up past $14 or $1,416, and silver also climbed more than 2.4%, up past $35. All right, with that said, we did see that traders on Friday cheered the Group of Seven's intervention to restrain the soaring yen, and the Federal Reserve cleared 19 of the country's largest banks to reinstate cash dividends. Makes you wonder what that will do to inflation in the future. But anyway, let's not get into that. Let's get into technicals. Per usual, we're going to be going over daily, weekly, and monthly on all major indices. So I'm going to be giving you a lot of information and fast. So pass this on to your friends. This would be very beneficial. This is the S&P daily chart. We had a nice uptrend going. We went into this triangle, which turned out to be a bullish pennant that did not go bullish, but instead dropped. We dropped, and I thought we might have a bull flag with the purple lines here, but we broke down past that. We tried to hammer out, but we never confirmed with a higher high. Dropped, got a bullish harami on Thursday. Friday, we pop up, we run up here, touch resistance, and drop, giving us a shooting star type reversal pattern. So far as the price action's concerned, things looking pretty bearish on the daily on the S&P. However, the centered oscillator, the MACD, we have a crossover at near a low area. So with that oversold indication, that's telling us we could continue to go bullish. But what we need to do, we need to close over 1283, preferably close over 1290. If we can close over 1290, then I'd think that it has some legs. But that 1290 is going to be a tough area to get over. So be watching that. Now here's the weekly. The weekly S&P looks beautiful. Big run up, beautiful bull pullback. This is not a hammer. A hammer means the body is the lower shadow is 2 times or more that of the body. We don't have that with little to no upper shadow. We do have that, but we're finding resistance at 1300. And so my guess here is if we can get up over 1300 this next week, that would be pretty bullish. Because they get past that 1290, I think we'll get past the 1300. If so, that we'll be making a higher high. And I think that we have a really good chance of running up here to about 1350. But if we run up to 1350 area and then drop, you will be in the makings of a double top formation right before April. So that's something we need to be I'm giving you a lot of foreshadowing here, so be careful with what I'm sharing with you. But that's what I foresee. I could see that double top or a trend reversal coming into play. Now here's the monthly. Let's take a look at the monthly. We come up, hit resistance, support. We're missing resistance. See how we're not hitting this? So let's talk about how we might end out the month. We have a lower high, lower low already. It's going to be almost impossible to make anything but a candlestick reversal pattern. Meaning this, if we continue down, you're going to have a bearish engulfing pattern. That's what we have right now. Now the month's not over, so we don't know if that's going to be the case or not. Hypothetically, if we go up a little bit right there, we'd have what's called a dark cloud cover. However, if we go up a little higher before the month's over 1300, you're going to have 2 formations. You're going to have what's called a bearish thrusting pattern, and you're going to have a hanging man pattern. If we go all the way back up here, you have a doji, which is a reversal pattern. If you go higher, you got a hammer. So this is a hanging man, hanging man. The only way to not get a hanging man is if we go higher than 1350. So by month's end, we could remain bullish if we do get over 1350. I think that 1350 is going to be a major area of resistance if we can even get back up there. So I hope you're hearing me. April could be a very bearish month if this is in fact a bearish reversal pattern on the monthly chart. All right, let's take a look here at the Dow. The Dow 30, the big blue chip stocks, lower swing high, lower swing low. We're just crashing and burning. A pretty nice little slide here. Things that drop fast tend to pump fast, so keep an eye on that. Nice increased volume on Friday, but a lot of that was the bears coming back in, yanking it right back down. But we have what's called a bear pullback on the daily, finding support at the 100-day moving average, but we have the 50 and the 20-day moving average up here acting as resistance. So the big number here is 12,000. The question is can we get past 12,000? That will be what we're looking for. All right, let's go here to the weekly. The weekly run up, 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 up. We got a very nice bull pullback with a hammer. I would almost say that's a hammer. The lower shadow 2 times that or more of the body. So we need to get a higher high going into next week. If we get over 12,000 next week, we should get a run. The question is, can we get past this trend line and make a new swing high? Or will we run up this trend line, stopping about where we were here? And that would put us at around 12,380. If we do that and then drop, there's your trend reversal, double top, big M. See the M here? M for murder. So if that's the case, that means on the monthly chart, you can see the M here for monthly, that this bearish reversal pattern would come to fruition and start to drop. So a lot of warning out there. I mean, we have lower high, lower low, bearish engulfing. It can come up, give me us a hanging man or a thrusting pattern or a dark cloud cover. The only way to keep this from being a bearish reversal pattern is if we go up here clearing these new highs and we get a body that's not two, with the lower shadow, it's not 2 times that or more. Because if you have that, then you have a hanging man. All right. Now, these are very important. The NASDAQ, we need to watch this one very closely. We drop here. We get what's called a bear flag. So there's our bear flag. We break down out of the bear flag. Now we get a bear pullback. There's our bear pullback. Instead of having the 100-day moving average acting as support like we do on the others, it's actually acting as resistance. So we're below the 100-day moving average. That's acting as resistance. We have a bear pullback taking place. The only thing bullish here is this crossover that we have. You can see the bullish tick on the histogram at this oversold area, saying that the oscillator is saying we are oversold. Look for bullish activity. Now, let's bring the weekly in. Here's the weekly. The weekly, come up here, hit resistance. We're pulling back, just a nice bull pullback. And we're looking for some sort of support at 2,600 and a bounce. If we can get that, the question is, can we make a new high? A new high from this area. Let's get back there to the weekly. A new high right about there. And can we get past 2835? If not, there's the big M. It would go up, hit our head, drop. M for murder. And speaking of that, how's everybody doing on your March Madness? I'm faring pretty well so far on my 2 brackets that I put together. Not too shabby. Should have picked Gonzaga. I had them on my list. I thought, nah. But they'll probably lose this one. But anyway, should have picked them. Here we are. Monthly, we come up. We're missing the high here, so it's going into a rising wedge formation, big trend reversal, or candlestick reversal pattern. The only way to not have that is if we get up past 2867. Other than that, if we don't get past that going into April, we're in a lot of trouble, I think, in April, unless we start basing sideways as a whole. Small caps, Russells. Come up, we get this bullish pennant, we break down, bearish pullback, we have support at the 100-day moving average, we're between moving averages, and it looks like this is going to want to go down. We need to get past 800. That's going to act as resistance. We need to pop through there. We do have the MACD oscillator giving us some support. Like, we can do it. Here's the weekly. The weekly looks nice. Nice bull pullback. Hammer time. It's there. And we just need to get up over 808. If we can get up over 808 going into next week and closing there, that would be quite bullish. And here's the monthly. So even if we do get up here, 808, you're going to have what's called a hanging man or even a bearish thrusting pattern, both of them together, and that would give us a better chance of droppage taking place than something popping. Woo, that's a mouthful. A lot of stuff. So in short, I think that we have a good chance of some nice bullish activity taking place coming into next week. But I'll tell you, rounding out the month, I'm thinking that April could be bearish, where we could get a nice significant pullback in the markets. If not sooner, I think that that's coming. So be very careful out there. And I've been talking to everyone throughout the week about the 101 courses, but hey, 101s will teach you about trading. The 201s will teach you how to trade. Big difference. I highly recommend that you get the 201s, advanced trading courses, 6 hours of me teaching you. Take care, safe trading. Remember, it's all about capital preservation, not making a profit. If you go and you look at and you practice your trading and your skill sets in the markets with that philosophy, with that mindset, the byproduct will be profitability.